Marcelo Williams here with Elliott Wave Source, #1 source for Elliott Wave Technical Analysis. Today is November 24th, 2013, and today I will do a brief recap on a couple of the pairs we touched on last week, and just to do a preview on those pairs as well. And let's just start out with the with the dollar CAD. Now, dollar CAD, this was a pair that went against our analysis, as we were looking for this pair to push lower at this point. So we had it at the ABC correction, with this being our C wave. The sub waves were 1, 2, 3, 4, 5. But as we saw, prices pushed beyond this descending trend line. Prices pushed beyond the descending trend line, breaking above, so the bias then came to the upside. So as we take a closer look, we saw that it still appears as if we're in that C wave, and we should be seeing the end of it coming towards 105.8. And the reason being is that as we drop down on the 15-minute charts and take a closer look, we saw the impulses as followed. We saw in that fifth and final wave, we saw that we had that 1 followed by 61.8% correction for wave 2. Wave 3 was the extended wave, extended slightly beyond 161.8%. And then wave 4 retraced towards the 38.2% mark. It went slightly past, but at the 38.2% mark, and it's finding support right here. So I'm anticipating that prices will push higher from this point. And we should see a target at 105.8, which was stated earlier. So prices should push towards this level and then correct from there. So definitely looking for a spike in the dollar CAD upon the open. So definitely a pair you can look to get long at this level if it's here when the market opens. Another pair I wanted to take a look at was the EURAUD. Now, the EURAUD, on last week, covered the chart of the day, and last week we had this labeled as, this was the ABC to give us that larger A, so this was that C, and the sub waves were 1, 2, 3, then a choppy 4, and then 5. So this was a larger A, and then this were to be the beginning of wave B. So this was in the form of impulses, which was stated, so we thought that we were going to get a zigzag correction. So we thought we were going to get the A right here with it for that zigzag. So we're going to get the A, the subwave A, and then followed by between a 38 and 61.8% correction for that B, and then we were going to get a C, and the C would break above and push higher. But prices continued to push higher and broke above that resistance, that descending resistance that we had set up. So prices broke above, which made us then readjusted our count. So at that point we had moved the A, the larger A, to right here, so making that the A. And the subwaves are 1, 2, 3, 4, 5. And then we were then in the B wave, and then the subwaves are A, B, and then now we're working on that C wave. Now, as we take a look, we see that we have the first of the impulses, which is that wave 1, followed by 38.2% correction for wave 2, and then wave 3 already passed that 100% mark. So we could see something towards the 161.8 mark, but I think we should just see something maybe just slightly past 100, and then it should correct towards the 61.8% Fibonacci retracement. Now, as we take a closer look at the 15-minute chart, you'll see what I'm talking about. So we said this is our larger A, and this is our subwave A. Our subwave B is right here. subwave B's right here, and then these are the impulses of our larger C wave within that larger B to this cycle. So it's as followed: wave 1, followed by that 2, then that 3, and wave 2 did a 38.2% correction. So for wave 4, we should see something towards that 61.8% level. So we should see a test of this descending trend line. So we should see a retest and then prices push higher from that point. So looking for this pair to push lower. Will not rule out if it push a bit higher, as it already moved past 100%, so we could see something a bit higher. But this is not something we would trade. You wouldn't trade the peak of a wave 3, as it could be an extended wave. But just definitely looking for prices to enter wave 4 and push lower towards that 61.8% mark, and then it will round out the impulsive wave count. Another pair I wanted to take a look at was the Aussie dollar. Now the Aussie dollar, we have entered this one quite early. Now the beginning of the week, beginning of last week, we were looking for we looked for shorts, and we found shorts at this descending trend line, as we were looking at that wave 4 correction. So we anticipated that we were at the wave 4 correction, looked for shorts at this level, and wanted to get short. So upon entering, prices then broke above our stop loss, which was set at 0.94, above 0.94. So prices broke above, stopped us out, but then covered another video on it, and it was finding resistance at the 76.4% Fibonacci retracement. So this was the subwave, wave 1, 2, 3, 4. So it's finding resistance at that 76.4% correction. And it looked as if it was poised to go lower, which it did. So it break below our targets of 0.92, and you see prices push towards that 0.915 level. Now as we take a look at the subwaves, we get a closer look at the picture. So as we see, prices did move below that 100% level of 0.92. So we had that wave 1, 2, 3, 4. Resistance at the 76% mark, and then we got that fifth and final wave. Now, being that prices broke below that level, starting to see a different picture. Now, we could see prices move towards that 161.8% extension of this wave A, and if that's the case, then the subwaves will then, for that wave C, will then be wave 1 would be here, followed by a 61.8% correction for wave 2. Wave 3 could be a 100% move, and then would give us that 38.2% correction, or we could see it push a bit lower as prices did break below that 100% mark. So we could see prices push a tad lower, and then give us a 38.2% correction for wave 4, and then that fifth and final wave should terminate at, take a look in this one. So the fifth and final wave should terminate at 0.90, just about that level, 0.90, which is right around that 76.4% correction of that larger wave. So we could see prices push lower towards that level. So we should just see a slight correction for wave 4, and then prices push towards that level, towards that 0.90 level, between 0.90 and 0.905. And the euro pound is another pair we were looking at last week. And the euro pound, we took longs at this level, thinking that we're within that new wave, and at 61.8% mark, we anticipated that was the end of that wave 2. But as we see, prices did push higher, push 60 pips higher, about slightly lower than that 60 pip mark, and then it just fell lower. So now what that looked like was a ABC. So A, B, C. Now the A and the C waves are equal in distance. So at this mark, it's looking like prices will push higher. Now, good area to get short, as you can just put stop below that 83 level, and if prices break below that, then we know the count would then be invalid. So a good area to get long and place stops, and then our targets will be 100%, should be 0.848, and 161.8%, which should be at 0.858. So you can do half and half at both those levels, but definitely looking for this pair to push higher. So I want to take a look at the Aussie Kiwi pair that we have been following for some time, and had this up in the technical area. Now prices did come down and test this level, so it appears as if we're still working on that wave B. So if we get a break below 1.114, then we can be in a flat correction, maybe expanded flat correction, or the count could be invalid. So we will be monitoring to see what takes place, but also at a good area to get long, as the stop loss will be really small. But for this one, I'll just hold off because we are in that wave B, and wave B are very unpredictable. So for Aussie Kiwis, we'll just hold off for now. The other levels, they looked pretty good, but with it moving so choppy, it would be a good point to just hold off because there are a lot of other pairs to trade at this point. And lastly, I want to take a look at copper futures. Now, the copper futures, in the video last week, we did say look for longs at this level, as prices found support at that 76.4% mark. And although it broke below this ascending trend line and retested a couple of times, which indicates that prices should go lower, but we did say hold off and look for longs, and the reason being was that the head and shoulder formation at the end of the wave. Now, head and shoulder formations usually signal that waves are ending and new waves are beginning, and that's what we saw, and that's what we anticipated. And as we saw, prices didn't go above, so we were saying look for longs at this level. This is where we did the video. We said look for longs right here, and as we saw, prices pushed higher from that point. So we got a break of the neckline, the descending trend line, and then prices push higher ever since. So now that was wave 1. Let's take a look at the waves. Wave 1 is followed by 61.8% correction for wave 2. And then we see prices are just a bit off that 161.8% level, which would give us that larger wave 3. Though if prices started to pull back from this level, we cannot rule out that well, we could actually, because prices would then violate. Actually, no, prices did not violate it. So this could be our wave 3, and our wave 4 could be right here, as prices did not violate the end of wave 1. So this would be 3, 4, and then that could be the 5th wave. Or this could be 3, 4, and then the 5th wave. So we'll definitely monitor to see how far up this pair will push, but definitely like this pair higher. Our bias is definitely there for the pair to push significantly higher, as this is that wave 2, so we should see a break of this descending trend line. And that's the video for today. Any questions or comments, feel free to jump in the chat room and fire away, or you can shoot us an email and we will gladly assist you with anything that may come up. For you guys that are going to be trading this week, have a safe week trading and good luck.